Let's talk the capital rotation watch, gold versus the stock market. It is over a certain level, which we've been talking about for a very long time. Let's take a quick look at it now and see where we are. So I'm going to share the screen for you. This is the X channel. Head over to my X account. It's Joe Main, one word. Share the screen. That's Bitcoin. We will come back to that. I'm going to show you the gold to SPX ratio, the S&P 500, which signifies the capital rotation from the stock market into the precious metals market, which is currently underway right here. So we've talked about it for a while. Other people talk about it a lot. If you subscribe to or if you follow North Star Bad charts, they talk about the capital rotation event, which is coming, and they talk about, which was interesting, we found it the same way. We came to the same conclusion. They probably came to it at the conclusion way before me, but I independently looked at this and went, oh, that's interesting. I like that 0.05 area. Then I started subscribing to North Star Bad charts, and they're like, yeah, we like that 0.05, that 0.5 area too. I'm like, good to know. Good to know that the professionals have the same opinion as the amateur. So it was pretty obvious here. Okay, this is the gold to stock market ratio. 3 times in history over the last 100 years, gold has had a massive run versus the stock market. Okay, the most recent one was in 2005 to 2011, when gold went from, like, in the early 2000s, it was around about $250, then it went to nearly $2,000 in 2011. Okay, and so the stock market, it wasn't necessarily the stock market was having a terrible time, although it wasn't having a good time in 2008. It's just gold was just massively outperforming it. Okay, since 2011, and I'm just reiterating a bunch of stuff that my subscribers already know, but these are for the new subscribers, the new people. Okay, stock market, totally killing gold market, totally killing it. So as this is going down, the stock market is way outperforming gold. Then you had a bit of a change back again. Gold had this time in 2018 to 2020. Okay, particularly peaked in, the March-April time of 2020. We all know what was going on there, particularly this spike right here. There's your March and there's your April. Gold was going crazy because of the reasons why. What was happening in March of 2020, which I don't name just for YouTube channel reasons. And then it just continued down. So stock market, quick panic here. Gold went up versus the stock market, and then the stock market went, yeah, no, we're good. And then had its absolute bottom, which I believe it to be its absolute bottom in this rotation, here at 0.0378. So you could have back here in, and look, hindsight's 2020, of course, we could have all done a million things, but back in December of 2021, imagine swapping your S&P 500 index or just your general stocks. You sold a whole bunch of stocks and just bought gold down in here. Man, you would have soaked up a whole bunch of gold ounces in your hand, in your bag, in your safe, in your whatever. Okay, and since then, it's just been ranging. Okay, between roughly 0.4 and 0.5. Okay, and this has been since early 2022. Let's pop here on the. This is the only monthly time frame, by the way. And so 1, 2, 3, 4, 5 tests, or credible tests. Yeah, you can call that a little spike there. So 5 tests and no go. Then, out of interest, this downtrend line did remain as resistance. So this point and this point formed this downtrend line. And right here in May of 2023, we had that 5th test. That 5th test was a failed move to break out. Oftentimes from a failed move is a fast move in the opposite direction. And we saw that a second attempt in October of 2023 to break out. Failed move, fast move to the downside. However, higher low. Okay, we didn't make a new low. And if you see very clearly, where are we? Not here, back here. Excuse me. Back here, you would have noticed, if you had been into looking at bullish divergences and all that. So this is in the first dip right here. So this is back in 2021. You would have noticed, so this is back here when you may have scooped up a whole bunch of gold. If you had have swapped then, you would have noticed a very big bullish divergence on the monthly time frame. lower low on the ratio number and higher low on the relative strength index. That would have been a massive indication for many people, as obviously it was, because many people snapped it up. So then there's those 5 tests, second test there, and then finally, okay, we had a breakout, but not a hold. Okay, so we had a breakout, this again on the monthly time frame. We had a piercing above the downtrend line, but it was a failure again. Okay, we had a spike, but spikes mean SHIT. It's where things close at. So close below, another fail move, and then back down. But we just found that nice little low right there at that average. Okay, so around that 0.42 level, and then finally, okay, we had another spike in August of 2024. No go. Okay, spiked, but look where it closed at, right bang on the downtrend line. And then finally, in September of last year, we had a break and a final close. Finally, we closed above this downtrend line. And I was saying back then, as you know, okay, we've had a final breakout and a close above the downtrend line. That's looking good. Okay, I don't think we would see this downtrend line, below there much at all again. Okay, October. Beautiful move, didn't test the 0.5 level, and then we had a retest. So you have a breakout and a retest, very normal. Breakout of a massive area, come back to retest it, perfect retest, little spike, close above, and then in November, what do you notice? Another little test, great, and then onwards and upwards we have been. Last month, in February, beautiful move, back above. The normal range was around about 0.48. And we didn't test it though, and just this month. Okay, so we're in March, fantastic. We are now above. So here's the great news. We are above 0.5. That's a very good signal to signify. And again, please understand, this is a ratio. It means that gold and the stock market could be absolutely tanking. They could, all right? They could be going down in dollar denominated terms. It's just that one is outperforming the other. Okay, and if you're confident that, the gold market, goes up and down, the stock market goes up and down eventually, you just want to be playing this ratio, okay, to up your shares of the stock market or upping your ounces of gold over time. But what this very likely signifies, the move up above 0.5 in the gold to silver, the gold to SPX ratio, is that gold is going to go through a massive run in dollar denominated terms as well, and it's probably going to be because the stock market is going down, which when we take a look at the stock market very quickly, it's already below its signs of doom for a period of time. So that's why gold has actually been down a little bit over the last week or so, but the stock market has gone down more. That's why you've seen this go up. So it's great news for gold versus the stock market. What we just need to do is we need to close the month of March or any month above the 0.5 level. It would be the first time since February. So since, what was going on back in early 2020, since then, so February of 2020 was the last time that we closed decently above. You could call it here December 2020, but I really wouldn't call that credible. Really here. So since February of 2020 was the last time we did it, those 5 spikes, all those failures, finally above it, that is a big signal for the big whale investors to go, okay, the stock market is done. Gold's time is back in the sun. It's now time to rotate back into precious metals. And that's where you'll see, look, it'll go up and down a bit, but you close above that 0.5, it's an excellent sign, and it just means very likely, I'll give you a 95% guarantee, barring black swan events, that, sure, up and down, bit choppy, but eventually it will be doing this, okay? It'll break that 0.6 level. It'll probably go up to, I think, back up to test at least 1-to-1, so a complete even parity with the stock market. Okay, imagine buying gold around about here. So that's around about your 0.5 level. And then later on down the track, swapping it for double the amount of stock market shares later on down the track than you would have if you had have just been buying the stock market now. Okay, you might be here's the thing, you might hate gold, and I do this with the gold to silver ratio a lot. You might think gold is a dead relic and you hate it. It's just old. It's a relic. Okay, it's old. I love the stock market. Hey, the stock market's been going down. Oh, fantastic. I'm going to scoop up more. Okay, yeah, you could do that. But what happens if the stock market is going down and you're scooping up some stocks, some S&P 500 or your favorite stocks or whatever, but you're noticing, oh, hang on, gold's going up at the same time. Stock market down, gold going up. If I just buy gold now, instead of buying the stock market, I can really take advantage of that later on down the track. And that's what many people will do, I imagine. They're going to rotate. What happens in investing in general doesn't happen exactly like this for all every person, I should say, is that the money is usually not taken out of the market and put back into just their bank accounts or fiat dollar currency. The money just moves. It rotates from one major asset class to another major asset class. And this is what this is signifying here. This is a major asset class rotation. Okay, capital rotation event. Short answer is, I'm very excited about this. The short answer is close March or any month, it is go, go, go time. So I believe it is almost go time for gold versus the stock market. Let me just show you the stock market. Quickly, we'll do the S&P 500. We'll take a look at the NASDAQ as well. Here's the SPX. Ooh, Barracuda. That's not good. Okay. Now, could it just sail up from here? Sure. Why not? Anything can happen, but look at this. It's not looking great. Okay. It would have to turn around pretty darn quickly, and it needs to close back above the level here of 5,770 on the S&P 500 index right there. You broke that line. You closed you closed the week. Last week you closed at it exactly. So interesting, isn't it? That was a spike. But this week, look, the week has just opened. It would have to be bloody quick smart. It would need to be a green week. It would need to close the week above there, quick smart, in order to say it's not further down from here. On the daily time frame, now look, I will say on the daily, you are already in or almost already in extremely oversold. Okay, sure. Look, I'll give it, anything can happen. This week, next week, if it starts closing back above the 5,770 area, sure. But if you do the following, you do that and that becomes resistance, ooh, Nelly, then it's very, very bad, okay? And that would continue to see, the gold versus stock market ratio go up, I would imagine. So yeah, not looking great for the stock market at the moment. All the warning signs are there, particularly that we're back down below this level. And the NASDAQ, for example, similar thing. Okay, so you've also broken there. Pretty simple. Look at the relative strength index as well. You've broken that level, not looking great, probably going down further over time. Look, it'll go up and down, but now this becomes a massive resistance level here at that, whatever that was, that $20,500 level is now probably resistance, and something like that-ish, more likely to occur. Again, if you start doing this and it fakes you out and goes, ha, sucked in, bitches, great, sure. But yeah, all signs pointing to lower from here. So that is the gold to SPX watch, the capital rotation watch. Let's get your comments below, and then we'll talk about precious metals and all that stuff. Cool. Load up on 10-gram bars and miners in terms of gold. Rhyme time, UK. I think the capital rotation event is absolutely happening, in my humble opinion, and I absolutely agree with you. I posted something last week on the Gold and Silver Stackers Australia forum. I think it was that one word. I think it was that. No, it wasn't. No, that was the silver price. Never mind. There was something different. But yes, I absolutely do believe it is happening. Just got to have that close above on the month, because don't forget the spike. You can have those quick spikes, and then if it closes below, that wouldn't be the signal. Okay, got to close monthly timeframes above it. Good day, good morning, says Paul. G'day, Paul. Great to see you, my friend. Great to see so many people watching. Lance, that upwards relative strength index broken downwards. That upwards relative strength index broken downwards on S&P for weekly. Ruh-roh is so. Ruh-roh if so. Yeah. Rhyme time. Let's pop this everything bubble. Yes, hold on to real things physical in your possession. I do. Thank you, sir. Sounds good. Good evening, y'all, says Space Miner. Great to see you, my friend. Yes, back on that comment. Let's pop this. It seems like the everything bubble at the moment. Hold on to real things physical in your possession. I agree with you for the most part that you want to hold things in your physical possession. So that be, precious metals. If you don't hold it, you don't own it. I do agree with that most of the time. As you know, I've worked for 3 major bullion dealers, so I've therefore had the privilege of seeing the back end of those businesses. So I'm more willing to trust something like an unallocated gold program, because I see literally, is the metal there? Yes, it is. Where is it stored? It's very secure. I've seen all that stuff. So I know how unallocated programs work from literally developing them, the policies and all that sort of stuff at various bullion dealers, and so I'm happy to trust them. So for example, if you were to go to what your favorite bullion dealer, if they have an unallocated account, what unallocated means is you're buying into the real physical metal, but it's held at the bullion business. Okay, you don't get to hold it yourself. So I get it, if you don't hold it, you don't own it, but there's a one little degree of separation away, which could be advantageous for many stackers who don't want to hold all their stuff in their possession. They don't want to bury it in the backyard. They don't want the risk of having the safe in their own house and all that sort of stuff. For me personally, it's a big security risk because of what I've done for the last 11 years, 12 years, well, since the last 15 years as a stacker, but the last 11, 12 years working in the bullion industry. I don't store stuff at my house. That's just rule number one, okay? My stuff's stored either at third-party storage facilities. I know the bullion dealers, I get good deals and all that, or I have a bunch of unallocated as well. So I'm happy to do that. I hear what you're saying, though, about physical in your possession. Also means, what else are you talking about physical in your possession? Do you have other physical things? Do you have an ample store of food in case something happens like a natural disaster, or just the price of everything just goes through the effing roof because of hyperinflation or just even normal inflation where we are? As I've said many, many years ago, I have a store of freeze-dried food. I bought it many years ago now, actually many years ago. It's actually technically out of its used by date, but in the freeze-dried food industry, they technically have to put a used by date on it, but it can last a decade, 15, 20, 25 years. I had literally emailed the CEO of the company that I bought from and said, hey, what's the go with these used by dates? And he goes, look, we have to put it on there, but we've tested all our products, and some of it, we've tested 25 years into the future, and it's still good. It maybe lost a little bit of its taste, but the nutritional quality is still all there. And I'm like, that's all I needed to hear, and that's why I bought from them. Do you have a means to protect your stuff? So all that kind of stuff you have to take into account as well.